SARS offers a scheme whereby certain taxpayers may receive a very generous tax-free bursary amount from their employer to help with the costs of educating a taxpayer's children. This extra income tax break could amount to a saving of tens of thousands of rands, and this is how it works. The employer sets up a bursary scheme which pays the employee an amount which the employee uses to help educate their children. This bursary amount is tax-free in the hands of the employee, provided that certain terms and conditions apply. The most important condition is that the employee earns less than 600,000 Rand a year. We'll discuss some of the other terms and conditions later, but let's first see how this works in practice. On an IRP5 certificate, normal salary earned is shown as code 3601, and this code 3601 amount is taxable. Any bursary amount paid to the employee is shown as code 3815 on the IRP5, and this amount is not taxable. This is perfectly legal if a proper bursary is set up according to what SARS regards as being a bona fide bursary. Your employer has to split your income between your salary and a tax-free bursary amount on your IRP5. The employee gets more income in total, but a generous portion of the bursary amount is tax-free. The salary less the bursary amount will be shown on the IRP5 as taxable code 3601, and the non-taxable bursary amount will be shown as code 3815. The terms and conditions are strict. SARS knows that this bursary concession is open to abuse. Merely getting your employer to alter source codes on your IRP5 without a genuine bursary is not okay. Your income must be less than 600,000 Rand for the year, so choose carefully between spouses' income when deciding which spouse would qualify for the biggest tax saving. You must draw up a bursary document with your employer stating all the conditions, maybe even including a clause that if the scholar fails to complete the course, then the bursary money will be paid back to the employer. You must keep all receipts and relevant paperwork, as SARS may insist on these supporting documents. The bursary may be for an employee or a relative being a child, grandchild, spouse, sibling, etc. The bursary must be for study at a registered educational institution. You must have a document stating all the conditions, including that if the scholar does not complete the course, then the bursary money will be paid back to the employer. You must keep all receipts and relevant paperwork, as SARS may insist on these supporting documents. The bursary may be for an employee or a relative being a child, grandchild, spouse, sibling, etc. SARS will grant a tax-free portion of the bursary up to 20,000 Rand per taxpayer for a scholar at school and 60,000 Rand for a student studying at a tertiary institution or university. Obviously, the tax-free portion of the bursary amount is limited. If you are given a bursary of 12,000 Rand for a child at school, then your tax-free bursary amount cannot be more than 12,000 Rand. If the bursary amount paid to you is 20,000 Rand and you have education receipts for only 16,000 Rand, then 16,000 Rand of the 20,000 Rand will be tax-free, and SARS will tax you on the balance of 4,000 Rand. This is how it works. Using an example where the employer receives a code 3601 salary of 500,000 Rand, we can see that the tax on the 500,000 Rand after rebates is 110,235 Rand. If the employer also pays the employee a tax-free bursary amount of 20,000 Rand, then the employee gets 520,000 Rand, but the employee only pays tax on the 500,000 Rand salary. The employee is not taxed on the bursary amount of 20,000 Rand. 20,000 Rand is the tax-free limit to a bursary paid to educate a school-going pupil, so 40,000 Rand is the limit to this tax-free part of a bursary for schooling 2 children. Although the employee receives an extra 40,000 Rand to help with the children's education, the employee pays no tax on this 40,000 Rand. If the employee received this 40,000 Rand merely as additional salary, then the tax due on this extra 40,000 Rand would be 14,400 Rand. Note that any part of the bursary that exceeds 40,000 is taxable. The tax-free bursary amount that may be paid to an employee for a student at a tertiary institution or university is 60,000 Rand a year. If the additional 60,000 Rand was paid to this employee as ordinary salary, then the tax due on the extra 60,000 Rand would be 21,600 Rand. In other words, the employee would receive a 21,600 Rand tax break if the 60,000 Rand was paid in the form of a code 3815 bursary instead of ordinary salary. Now, I'm not suggesting that everyone rush into the payroll office and ask for their ILP5s to be altered. Far from it. I am suggesting that maybe taxpayers should talk to a tax practitioner to verify their tax savings and approach their employers to arrange that their employers institute a legitimate, genuine bursary scheme tied in with restructuring of their salary packages. This restructuring of salary and bursary packages may mean no extra cost to the employer. A scheme like this is to the advantage of all parties, including SARS, who will see better educated people entering the workforce one day, earning better salaries and paying more in income tax. The figures used in the video example show tax-free increases in income and even big reductions in the amount of tax due where a salary package consists of less salary and more bursary. The employee savings will mean that any fees charged by a professional tax practitioner will be money well spent. Note that other factors such as medical tax credits and also allowable deductions such as contributions made to retirement funds, etc., can affect the final tax commitment. This could even increase any tax savings shown in the simple examples used in the videos.